I rarely do any kind of sort of like price predictions in terms of like where I think a particular stock price is going to be, but
I don't know if
it's
I've
kind of
ever
hard
heard
for me.
you give a prediction
Say
like
again?
that. I don't think I've ever heard you give a price prediction.
Yeah, yeah, I haven't. I don't. I mean, generally speaking, I don't know what the price of things are going to be, but I was doing some basic math on Micron in particular, and I'll walk you through the math real quick. But basically, the math goes like this: they're expecting to have $18.7 billion of revenue in the quarter that we're in. That this quarter they're going to report their earnings in 60 days, roughly speaking, in a couple months, because their quarter sort of ends in this weird time frame. And this is like Q2 2026 for them that we're currently in. And they're expecting 18.7 billion in revenue and $8.10 per share in profits. Okay, so I'm going to assume moving forward they have zero growth until 2027 because they're already sold out. They're at capacity until they bring on more manufacture or more facilities. They can't really grow their revenue significantly. But let's take the 18.7 billion number for a moment and multiply it by 4. That's the revenue run rate that I would expect them to have if they meet this expected $18.7 billion number. So when you multiply that by 4, you get 74.8 billion of revenue run rate. 78 billion, by the way, is roughly 70% higher than their 42 billion of revenue last year. So huge growth, over 70% growth. But then if you take their EPS number, the earnings per share number, and multiply it by 4, the $8.10 that they're expecting to have this quarter, then you get $32.40 of EPS, 32.40 of earnings per share, right? That number to me seems absolutely crazy. So a company that is growing at 70%, building more capacity for 2027 and beyond, which is going to be expecting to grow even more in 2027, is certainly going to trade at a fairly high premium, a PE ratio. You know, the only other company I can compare it to is Nvidia, which trades at a very high premium PE ratio of 45 to 50. But let's say it gets a discount from that and trades at a 30 PE, which is what it's getting currently. Even at a 30 PE, when you multiply it out, 30 PE times $32.40 per share of EPS, you get to this $972 per share price. And
972.
972.
Okay.
And when I did that math, so you asked me this question of like, you've never seen me add so quickly to
Yes.
a stock. And then like I added after the stock had ran up a little bit too, since I had bought it. After I did this math, I'm like, okay, I just calculated rough numbers, basic, simple math, that this stock might be a $900 stock in a year, which is super
Non-investment
rare
advice.
for me to have that kind of visibility or that kind of prediction on any kind of stock. Um, and if I don't pull the trigger and buy more, I'm going to kick myself. And that's the reason I bought 25% more Micron. And I might still kick myself that I did not buy enough if it actually,
If it actually hits
comes
it.
about. But like even I am skeptical of my own math. And I put it out on X asking other people what they think. And the only thing people can come back with is that memory is cyclical and um, Micron is a cyclical company. And I'm like, God, if you can't tell me when the cycle ends, your argument is pointless. So I just don't subscribe to this cyclical argument. To me, Micron, it feels like, all else equal, market doesn't crash. The other stocks continue to go up in a similar fashion. They maintain their same PE ratios and so on. Seems like unless the management is lying or for some reason they are unable to deliver on the $18.7 billion revenue run rate per quarter, this should be a slam dunk, 900 and some change uh, stock. Now you can take this clip and take slam dunk and bring it back to me when when Micron actually crashes and it's like $100 stock, but in a year. But I feel like it's a risk worth taking. That was my math calculation there for Micron.
Ooh, do you think there's a risk of them overproducing memory?
Not in
And
2026, maybe 2027, maybe 2028, uh, but when your entire supply, your ability to create product has already been contractually sold out, which is what management is telling us, by the way. So there's a possibility that management is overselling what contracts that they have in place. Maybe these contracts are cancelable, and all of a sudden Nvidia comes back and says, "You know what? We figured out memory. We don't need Micron anymore. Sorry, we're canceling this contract." Or whoever is buying them comes back and cancels their contract, and they don't have to pay Micron. Those are all possibilities of what could happen. But if those things are happening, then chances are NVIDIA is in trouble. Chances are other chip makers, AMD, Broadcom, etc., are in trouble, and all of them are trading at much higher price earnings ratios than Micron is. So that's what makes me confident in Micron's position in that as long as GPUs and AI chips continue to be in high demand, Micron should also Micron's products, memory products, should also be in high demand, and storage products too. By the way, they also make SSD drives and storage products for servers.